So, look, there's a lot happening in the markets right now, whether it's Bitcoin, whether it's gold, whether it's treasuries. Of course, looking at the China data as well as we track towards the non-farm payrolls report on Friday. What should we be focusing on right now and why?
Good morning, Jan, and thank you very much for having me today on the program today. Well, I think the focus again is going to be on the Federal Reserve. You mentioned earlier that we have both the ISM coming up this week along with the non-farm payrolls. Now, this is going to be very important, I think, for how the market is going to expect changes by the Federal Reserve. As of today, the market is pricing as many as 5 rate cuts for next year. That can be probably a little bit aggressive in our mind. We are expecting around 3 to 4 rate cuts next year. But certainly the mantra of the market today has moved from higher for longer to higher for later. And clearly this is a big shift in the market sentiment and how investors in general are looking at the Fed. I think in 2022, for example, both the market and the Fed was really fearing inflation. In 2023, the Fed for sure continued to be fearful of inflation, but the market was much more focused on the recession mantra. And clearly, if the recession was supposed to happen in 2023, it should have happened already. So today we are in a situation where there is a disinflation coming in. We have at the same time an economy that is but avoiding a recession. Yes, Dan.
Alexandre, let me jump in. It's Steve here as well. Look, let me just point out the bleeding obvious here. If the US economy is growing at 5% in the third quarter with interest rates where they are, and nominal spend over the holiday period is up 7.3% from the US consumer, and corporates are still making more money than people expect them to be making, where is the impetus for 5 rate cuts?
Well, I think there are 2 things here. There is the past growth and there is the expectations of growth. For 2024, a lot of outlooks continue to be a little bit negative as far as the economic outlook. Market is expecting around 0.9% growth only for the US in 2024. We ourselves at Indosuez are a little bit more optimistic at 1.2%. So we are not in a situation, of course, of an economy that is actually collapsing. It's a definition of what we call the Goldilocks. You have a disinflation process coming in your way. You have an employment market that is going down. You have an economy that's going down, but it's avoiding the recession. So, and as you said earlier, at 2.5% real interest rates, the financial conditions are far too restrictive. It should allow the Fed actually to start normalizing the Fed policy, but without being